When you look at commodities in 2019, what's your favorite play?
It's a great question. I mean, obviously, we've had lots of news recently with regards to impacting some of the commodity prices. But I think that the general theme this year is our expectation is one of kind of consistent approach from the companies to be able to return the margins that they're making to us. And I think commodity prices as a whole look pretty good. I mean, 2018 average prices were actually higher than 2017, but the year as a whole was tainted by the Q4 sell-off, which was a very, very aggressive fall. So I think if it hadn't been for that, we would be the sentiment would be much more positive than it kind of feels right now. And I think the results that we've got coming up are really going to set the tone for the year ahead.
Evy, when you look at the Valley Dam incident, how does it actually change the game for the sector?
Yeah, obviously it impacts the supply, and it particularly impacts the supply of certain components of iron ore. So some of the high-grade material and the material that would go into pellet production. Yep. And so what we've seen is a massive increase in prices following this tragedy. And I think analysts as a whole appear to be thinking that this is going to play out over a multi-year period. You know, the industry is going to have to contend with greater levels of regulation. It's going to take time to get projects approved, so that's going to impact future supply growth. And also in the near term, we've probably got a supply disruption as other companies start to think about where they're going to get the material from.
But will shareholders actually ask for more safeguards, right? So more operationally safer products, and does that actually change the industry?
Yeah, I think what we're seeing in the commodity space right now is, and I think this trend will become much more pronounced over the next few years, is we're seeing a divergence in commodity prices. So some commodities that have a kind of a carbon light production process are trading at premiums. When you have specialty materials or specialty products that require high degrees of purity into certain elements of supply, then you get that different pricing coming through. So my gut feel here, and this is a strategy we're deploying in our investment trust at BlackRock, is that we're starting to see these kind of specialty metals trade at different levels. And I think in time you might get some kind of green pricing coming into commodities and them trading at higher prices than the kind of standard commodity metrics.
Okay, so I know Eric looks at palladium all the time, so let's get us briefed on palladium. If you had to choose between palladium and gold, what will rally more this year?
Well, I think they're very different in terms of their fundamentals. The palladium is obviously heavily impacted by the auto space, and gold is much more of a kind of currency in a way. I think what we're seeing in gold is last year we had this kind of peak in pessimism around it with strong US dollar, high expectations for rate increases, etc. Those have waned, gold's recovered, and we've got gold prices well above $1,300 an ounce. Palladium is in massive shortage of supply right now. You've got strong demand from the auto producers for the niche application that palladium has. Look at the sister metal platinum. I mean, the prices, they couldn't have diverged more, yet they have similar applications. So it's really a function of the changing auto market and I guess the move away from diesel towards electrification through time.